I've been trading with trend lines for well over 10 years, and in this video I've compiled the 13 most helpful tips that will help you improve your trendline trading, and I've also included things that you have to avoid at all costs. So let's get into the video. Trend lines are more subjective than traditional horizontal support and resistance, and to make sure that your trend lines have a high quality, we have to make sure that every trend line has at least 3 touch points. Only when a trend line has 3 touch points, we are talking about a valid and a confirmed trend line. So that's very, very important. And the way you then use a trend line, and there are many ways as you will see in this video, but one of the ways is for trend pullbacks. So what you do is you're looking for a trend line, and then on the 3rd touch, you are looking for trades away from the trend line. In this case, because the trend line is sloping upwards, we're looking for buying opportunities on the 3rd, 4th, 5th, and so on touch point. And one way you can do that, which is how I like to do it in my trading, is that I go to a lower time frame once I see the market is back at a trend line on the 3rd or 4th touch point. And then on the lower time frame, I try to time my trades away from the trend line. When it comes to drawing a trend line, it is okay to cut through the candlestick wicks or the shadows, whatever you want to call it. However, you have to avoid cutting through a body. If you have to cut through a body to get in a trend line, it takes away from the quality. So to improve the quality of your trend lines, make sure that you don't have to cut through a body. And if you have to cut through a body, don't use that trend line. One really important detail that a trend line can tell you is the trend strength. So very often you can see that as a trend progresses, the angle of a trend line changes, and in this case it changes significantly. In the beginning you can see the price is rising very quickly and the trend line is very steep. And then in the later parts of this trend, the trend line changes a lot, and now the trend line is way flatter. And this shows you that in the beginning the market was able to rise in a short amount of time a lot, and then here in the second part, over a long amount of time, the market was barely able to move higher. And when we look at the highs, the market was not even able to make a higher high. So a decrease in the angle and a change in the angle can tell you a lot about the loss of power, the loss of momentum, and it's often foreshadowing a complete trend reversal. In this context, the trend line can also help us understand trend waves, and this is what I find really interesting and very, very helpful. So when you are in a downtrend, when the market is overall in a big picture downtrend, you want to look for selling opportunities. And you want to look for selling opportunities after the market has put in a consolidation, ideally. So when we look at trend lines, and we can use them to see, is the market falling fast, such in this case, and is it rising slow? So in this case, we have a lot of sellers here in the initial part, and we don't have a lot of buyers in the second part. And this is a very important piece of information, because trends, as I've said many times, they don't just take off in rise and fall in one straight line, but there's always this back and forth. And to understand this back and forth, it's one of the keys for trend continuation and trend following trading. So when you can see that the downtrending waves are moving very quickly, whereas the bullish trend waves are moving very slowly and are almost not able to get higher, that's an important market tell, because it shows us we have a lot of sellers, we don't have a lot of buyers. And this indicates that the continuation to the downside is way more likely because the sellers are in control. Another example here, the market is falling fast initially, and then here with this trend line we can see the market is rising very slow. Here's a very important pattern that we will see later in more detail, the break and a retest pattern. And you can see after the market is pushing out of this slow rising phase, the trend is continuing, and we are continuing this big picture downtrend. Takeoff and sustainability of a trend line is a very important concept. So what you will see is we have an established trend line, 1, 2, 3, 4, 5 touch points, and the trend has been going on for quite a while. And then suddenly out of nowhere, the market takes off. And if this happens in a trend context where the market has already been moving higher for quite a while, it is not recommended to jump on such a takeoff, especially if you don't catch the takeoff early on. If you are looking at the takeoff later and you just be aware of the chart later, then I would recommend to stay away from it, because this is not sustainable. And a lot of people have been already long here all the way, and they are looking for taking profits somewhere up in this takeoff. So what you will often see that, first of all, this is unsustainable. The market will often reverse back to the trend line. And if the market after such a takeoff comes back to the trend line, I would not recommend to look for more longs, because a lot of people who have been long have been probably thinking about or taking profits already, and a trend reversal or the end of a trend is often very likely after such a takeoff. The build-up, I love the build-up when it comes to horizontal support and resistance, but we can also use the concept of trend lines here very, very nicely. And what you have to ask yourself with the build-up, how strong is the market pushing into a level, and is the market pushing into highs or is it pushing into lows, and how are the highs and the lows shaping on your charts? So we can clearly see on the left side we were in an uptrend, higher highs and higher lows. Then we rolled over, we made lower lows and lower highs, and then here we put in a consolidation. The market kept pounding and pushing into this same horizontal level, but every time the market reached a level, the market was not able to move higher, and every time the reaction from the level was weaker and weaker. So this indicates already that there are not a lot of buying and there are not a lot of buyers here in the market anymore. So although we don't know in advance if the market will actually break out, if you see such a build-up and if you see that the market is keeping pushing into a level and it's not able to move higher away from it, that can often be a very important market tell. And if you see that, get ready and wait for a breakout. Very similar to a breakout, but just in a different context, is the momentum loss. And when we look at this established trend line, we can see the market reached the trend line many times, and we always saw a very nice reaction and the market rallied higher. However, here in this last part, it looked very different. The market reached the trend line, but we were not even able to come close to the previous high point. And you can see the market really stuck to the level. So what is happening here is that whereas previously we saw a lot of buying interest, there was no buying interest at all here in this region. We also can draw a support and resistance, and we will be seeing that the market is staying underneath this level. So there's not a lot of buying interest. So probably the trend has been going on obviously for a long time. Many people probably took exits, took their profits. A lot of buyers are exiting the market, and that is contributing then to the momentum loss, and a turnaround is very likely. So if you see something like that, the way I would use it is look maybe for on the lower time frame for breakout scenarios and then trade away from this trend line. Continuations are a great way to use trend lines, and the way you use it is to use the trend lines to define continuation patterns and to look for continuation phases. So in an uptrend, you are often able to draw a variety of different continuation patterns. I have compiled a few more important ones later as well during the video, but one of them is the so-called flag. And a flag is among the most highest probability patterns that you can find in your trading, and they are really, really powerful. So we are in an uptrend, and then the uptrend is pausing, we're moving lower, and we are building this channel here. And we are still obviously in this uptrend here. As you can see, the market is still much, much higher than where we started on the bottom left. So this gives us the indication we are in an uptrend and we should be looking for bullish continuations. And a continuation is then often triggered once the market exits and breaks out of such a flag pattern. And that's then where you can look for long opportunities. And you can see the market very often after the exit of such a flag or any continuation pattern. Once it picks up the momentum, it goes really, really fast. So there's a lot of pressure building in those continuation phases. And it's important that you wait for the breakout and don't start trading within the pattern. It's a very common mistake that a lot of traders do if you're impatient and you really want to trade, but make sure that you always wait for the market to actually fully get out of a pattern. Another pattern here is, we can call it maybe a contracting triangle, maybe a wedge, whatever it is. It's more important what it shows you than how to name it. And what we see, we see the market is in a downtrend, very strong initial push, and then here is a consolidation phase. However, look at what is happening during the consolidation. The market is obviously not moving higher at all. We are not even able to come close to this high that the market put in, and the market is really, really sticking here to this downward or to the lower trend line. We are making lower highs as well, and the market is really sticking to this level. There's almost no buying action at all. Granted, there's also almost no selling action, but in this overall context of the market already being in a short market, what you want to see is, if you want to be a long trader and if you want to be a buyer, you want to see the market break highs or at least show more bullish reactions. If not, then nothing has changed in the overall context and there are probably way more sellers. And then the last thing you have to do, which is the hardest part, is wait for the breakout. Again, don't trade patterns as long as the market is still within a pattern and it hasn't cleared a trend line. Always wait for the market to fully break out. That's the key for pattern trading. Break and retests are also very common, and trend lines can change how they are being used. So we have a trend line that in the beginning was a support trend line, and then the market breaks it. And I would recommend and suggest that you don't take off your trend line right away when it is being violated, because very often you will see that the market is then coming back to the trend line from the opposite direction. And just like we use this in our regular support and resistance, where support can turn into resistance, we can also use that same context for trend lines. So keep the trend lines on your charts for a little bit longer and observe how is the market reacting to it from the other side. And again, you can use it on a multi-time frame approach. So this could be a higher time frame. We see the break, and then when the market reaches this trend line again, you can drop to a lower time frame, whatever it may be, 15-minute, 5-minute, and then look for trades away from it, and now using the trend line as resistance. It's a very common feature that you will often see the trend line flip. It's a support, becomes resistance, becomes support again. So this can make your charting much easier. You don't have to always change everything and take off the trend line and look for new ones. What I do is I keep them on my charts and see, do we get back to respecting the trend line? And if there's a yes, then obviously keep it. But if the market never comes back and doesn't care about the trend line anymore, then it's time to take it off. Trend lines can also be used very nicely as foundations for patterns. And often we use just traditional horizontal support and resistance for pattern trading. However, if you are also using trend lines, it can help you find different types of patterns, so that in different market contexts, you are able to find patterns. So here we are looking probably at a inverse head and shoulder. And in this case, the head and shoulder has a neckline that is made up of a trend line. So very nice conflicts. We also have here the 50 period SMA, which also helps us with a little bit more objectivity around pattern trading. And the way you use it then is either look for the breakout or wait for a pullback afterwards. So the pattern really indicates a shift of momentum. We're going from a downtrend underneath the 50 MA to then making a double bottom. We are breaking the highs, we're making now higher highs, and then the uptrend is starting. Patterns can also be obviously trend continuations, as I've shown you, and head and shoulders especially can be used as a trend reversal pattern, such as this in this case, or it can also be used as a continuation, which is fascinating. So here in this case, we are in a downtrend. Again, ask yourself, the market is falling very fast and it's rising very slowly. How is it rising? First of all, we have a nice trend line that makes our life a little bit easier, so we can use that trend line for breakout trading. We also see from left shoulder to the head, the market is making a higher high. From the head to the right shoulder, it's making a lower high. So that's a very important shift in market sentiment. If you want to be a buyer, that's the last thing you want to see. You don't want to see the market making lower highs. So we are back to overall downtrending scenario. We're back in a short-oriented mindset. We don't automatically short just because we have a lower right shoulder, but it indicates that there is probably a lot of selling pressure building, and then we wait for the breakout. And if we get the breakout, that gives us a lot of confidence, because the breakout happens in the perfect context, and that is what we need as traders. Contraction is important. Wedges are very powerful, and wedges, you can see we have two trend lines in this pattern. The trend line is moving down very fast, and on the other side, on the bottom side, the trend line is way more shallow. And this then obviously leads to a pattern, a pennant, whatever you want to call it, but the point is that the space between the trend lines gets smaller and smaller, and there's a lot of pressure building often within those pennants or wedges. And especially if they happen in the right context, they are great patterns. So what is the context? We are in a big overall uptrend. We are also here in the support and resistance area, and the market is making a flag, or whatever you want to call this pattern. So we want to be long because we are in an uptrend, but we need to have some type of pattern, or at least some trading plan here. And such a pattern helps us to get a little bit more of an objective trading plan. We want to wait for the pattern to be cleared, obviously, and you can see there's so much pressure building up. when the market is breaking out, the pressure is released, the sellers are completely withdrawing, the buyers are fully taking over, and you can see how fast the market is moving higher. Another thing that can really help your continuation trading is when you find those springs. Springs are failed or fake breakouts, and they happen within patterns. They can also happen within horizontal support resistance, and in this case you can see we have a pattern within this flag or wedge. Again, what is the context? The price has been rising fast and it has been falling slow. So obviously it is more bullish than bearish. So we want to look for longs. Then we have this beautiful pattern here that is defining our consolidation. We have a failed breakout. So the market did actually try to break below those lows. The market failed to break lower, was rejected, and then within the next two candles the market was on the other side of the pattern. So we have completely changed our sentiment from trying to be a short market, which has failed, to now seeing huge bullish pressure out of the pattern, and we're continuing our overall uptrend. So we can nicely put things together, and those are my 13 tips on how to use trend lines effectively. Let me know which of the ones you find the most helpful, the most interesting, which ones are you using already, and maybe what did I miss? I look forward to hearing from you.